Hello, I'm Michael Hainsworth. It's been written many times, Canada is at a critical crossroads. In the face of rising geopolitical tensions, shifting U.S. trade policies, and economic uncertainty, the country must act swiftly to secure its long-term prosperity. Energy is a critical component to that. The Institute believes Canada must eliminate the proposed oil and gas sector greenhouse gas emissions cap, depoliticize major project approvals, and unambiguously include oil and gas in its plan for Canadian energy. The argument? Doing so would head off growing unease, while renewable energy development plans continue. Meet Travis Toews, a former Minister of Finance and President of the Treasury Board for the province of Alberta, and a senior fellow at the Institute.
My advice to the Prime Minister's office is ensure that we have an environment in this country where we can get big projects built and developed.
And Rory Johnston, the founder of Commodity Context and a lecturer at the University of Toronto's Munk School of Global Affairs and Public Policy.
My advice to the Prime Minister would be to do one of two things: to either dramatically and rapidly de-risk the investment and construction of a pipeline to the West Coast immediately, and or use the existing power of the Trans Mountain Corporation to expand capacity in that current line, and if that is not sufficient, build a new pipeline with that Crown Corporation.
They join us now. Thank you for joining us.
Thank you.
My pleasure.
Are pipelines the solution to weaning ourselves off America as our energy customer?
Well, Michael, I would certainly say they're part of the solution, but you know that's a complex question. There are many pieces to it. Firstly, I absolutely believe that the energy industry is perhaps, at least in the short run, likely the most scalable sector to turn the trajectory, Canada's economic trajectory around, which, you know, I think our current trajectory and the challenges of our current trajectory are well documented. We've had, you know, stagnant business investment. We've had declining GDP per capita. Our productivity spread between the U.S. is only increasing. And all of that is really difficult for as we look at the prosperity for future generations. So, you know, now that we're faced with really a challenge of trade and a challenge of uncertainty with our largest trading partner being the U.S., we really need to consider all options. So, yes, I think the energy industry is likely in the short run the most scalable sector to really generate wealth for the nation and to create opportunity and less dependence on any other one nation, in this case, that being the U.S. But I'll say this with respect to pipelines. The U.S. will always be an important trading partner for Canada, particularly with energy. And so I believe we need to continue to look at, you know, pipeline opportunities into the U.S. But today, right now, at the juncture, at the point we're in, I think we need to take a look at additional egress capacity to our other ports to ultimately ensure that we're not totally reliant on the U.S.
I'm going to split the question in two a little bit, because I think that there's a question, I think, as Travis just, I think, rightfully pointed out, the idea of scaling the industry and scaling oil and gas production up. For that to occur, we're going to need more egress. Right now, we're actually at a little bit of a Goldilocks moment. We're actually in the rare moment where egress capacity out of the Western Canadian Sedimentary Basin, the broad Western Canadian oil patch, is actually sufficient. Arguably one of the first times in my entire career. And we see differentials, or the price that we get for our oil, reflective of that. If we want to continue growing that production, we're going to need to grow egress. We obviously have this kind of sweet spot and this sufficiency following the startup of the Trans Mountain expansion, without which we would already be in a massive world of hurt. So I think even outside this question of diversification, even just in terms of, you know, scaling up oil and gas production and economic kind of contribution to the entire national economy, that's going to be kind of a critical component of that, because we're going to overrun this newly expanded pipeline capacity, likely by the end of 2026, early 2027. I think on the other side, this question of diversification away from the United States, I think, as Travis rightfully pointed out, there is no way for us, truthfully, and I want to be very, very honest with this, to completely decouple ourselves from dependence, if you will, on the U.S. energy sector and refineries in particular, because really the Western Canadian oil production sector and the US refining sector co-evolved over the course of decades. We've spent hundreds of billions of dollars investing in equipment and pipelines and commercial relationships that make these systems work in unison together. Canada now accounts for over 60% of total US crude imports, and we supply a type of crude, heavy sour crude, that the US can't produce, and that their refineries are uniquely positioned to process. So while I don't think that we can completely diversify away from that demand base, what expanding capacity to, say, the West Coast out through BC or the East Coast through some kind of reimagining of an Energy East pipeline or equivalent provides us not necessarily a way to, diversify completely away from the US, but optionality. And I think when you're looking at a traded market, optionality is everything. And when we don't have optionality in our relationships with the United States, it means that those commercial refiners can exert, pressure on our markets and kind of control our prices to a degree. So optionality breeds freedom. And that's, I think, what we want here.
But can we get the provincial ducks in a row for East-West pipelines?
Should I'll continue on this one. I think so. There's a question here. I think what's really interesting is if you had asked me this question a couple of years ago, I would have said absolutely not in a million years. But I think what's really interesting through this kind of immense geopolitical brouhaha between, Ottawa and Washington and threats of annexation, we've seen this rise in kind of Canadian nationalism that has manifested in many ways through support for our oil and gas sector, and particularly with support for coast-to-coast pipelines, coast to coast, if you will. And I think if you look at the polling, even in Quebec, which obviously during Energy East, it was effectively a complete non-starter to try and get a pipeline through Quebec for crude oil and diluted bitumen out to the East Coast, to the Maritimes. But recent polling has found that either strongly or somewhat support this notion, and Quebec now stands at like a shocking 78%. I think this is a month or two ago now, so that could have changed. But what we've seen is historically commercial options were only looking to the West Coast, and now you're actually seeing potentially even more opposition at the West Coast than you are on the East Coast. So I do think that while the commercial realities of a pipeline to the West Coast and East Coast are different, and we can talk about those later in the podcast, I do think the political reality of them is making them possible for a moment right now in a way that I wouldn't have thought possible even a couple of years ago.
Does the veteran politician agree?
Well, I would, and I think we've seen a seismic shift in the polling around the support for the oil and gas industry. I think a Nick Nannis poll earlier in this year now shows that almost 9 in 10 Canadians recognize and appreciate that the oil and gas industry makes a very, very significant economic contribution to the nation. And over 70% believe that it needs to make a very important economic contribution in the future and be expanded. And so, this is my assessment, Michael. We're growing up as a nation again. I mean, it's time we get serious as a country, and I think we can probably thank our friends in the U.S. for ultimately making us really take stock of where we're going economically, and I think largely Canadians have come to the realization that we need to get serious as a nation around growing the economy, around economic resilience. We need to play to our strengths. The resource industry is a huge strength of Canada's, and we need to get on with it.
But where are we on relations with First Nations groups, which have previously rejected pipelines through their territories?
Well, I'll start on this one. I've seen, certainly since 2019, when I became active politically, I've seen just increasing support broadly. I'm going to generalize here, but broadly and generally increasing support amongst First Nations communities for an expanded resource industry. I think, both governments and resource companies themselves, oil and gas companies themselves, have been much more aware of ensuring that First Nations communities have, methods to participate in the wealth creation, directly in the wealth creation. That's ultimately tied to the oil and gas industry. And that's been important. And we've seen just increasing support, in my view, not unanimous, but increasing support amongst First Nations communities for an expanded role of the resource sector in Canada. I mean, I'm not sure there's an industry, quite frankly, Michael, in Canada where there is so much direct participation by First Nation communities, and the wealth creation and the impact that makes on quality of life in those communities is astounding.
What do we think of the proposal to declare a national emergency, to use the powers under the Peace, Order, and Good Government Clause in the Constitution, or the Notwithstanding Clause? Pardon the pun, but do we need to go nuclear on oil?
I think the importance here is that we have to recognize what has prevented a lot of pipeline construction historically. And I think when we can look at the Trans Mountain expansion, I think, is a case in point. When Kinder Morgan was initially building that pipeline prior to it being sold to the Crown, to the federal government, they were obviously inundated. It was the kind of death of a thousand cuts. They were constantly sued, or they had various court appearances, and generally they kept winning. The problem is the continuing, the unendingness of that. Part of what allowed the federal government to build this pipeline was that it had kind of a superior standing to, for instance, the province of British Columbia, in order to kind of, both survive those court challenges, given like a longer, a more patient timeline. And I agree, we might not want patience in this current moment, but I think in dealing with court challenges, for instance, patience is important. But I think also that crown kind of supremacy, or crown privilege, if you will, of being able to kind of really back this idea that part of the federal government's jurisdiction is over cross province, infrastructure that facilitates cross province trade, which a pipeline clearly is. So this was never a question of, I think, constitutionality. It was a question of who really had the position to kind of full-throatedly kind of use that constitutionality to the benefit of the pipeline, which is why I think in many cases, what we're talking about right now in terms of declaring something in the national interest, we're talking about ways to incentivize or clear the way for a private proponent to come back to the table. Because part of the challenge right now is that even with Northern Gateway or Energy East or any other permutation of pipeline, we don't currently have a proponent on deck. So what we're talking, it's a little bit of a chicken and egg problem. We were talking earlier about this kind of previously kind of unthinkable level of support border to coast to coast for Canadian pipelines. And we don't want to lose this opportunity. We want to, strike while the iron's hot, but without a proponent, it's difficult. So I think this, the debate right now in my mind comes down to how quickly can we get a private proponent to kind of come up to the bat and try and take a swing at this first new, at least vibe, from Ottawa about the positivity of pipeline construction, versus how much is this going to fall to, for instance, the existing Trans Mountain Corporation to either expand capacity on Trans Mountain, which it can do, and we can talk about that later, or, as we've already seen the CEO mention, the CEO of Trans Mountain Corp, for instance, mention that they could potentially take on another pipeline. And I think this is this question of, I completely agree. In a ideal world, it would be a private sector proponent that's going to restart this cycle of private sector major project proponents. But in the meantime, we're going to need a pipeline. And I personally would think that pipeline and that expanded pipeline capacity is more important than necessarily being built by a private actor.
I'm not sure we have to go nuclear right now, and it'd be great if we didn't. We need to find a way to get these projects done. I think. And this isn't news. Canada's been considered a country, even by our own large, pension funds here in the nation. We've been considered a country where you can't get a large project done, and that's a terrible reputation in terms of investment attraction and ultimately wealth creation in the long run. So we need to do what it takes to change that narrative. And again, we seem to have clearly increasing alignment amongst Canadians, which is also translating into increasing alignment amongst provincial governments and provincial premiers. And now we have a prime minister who's certainly saying some of the right things around, ensuring that we can position Canada for absolutely significant economic growth, significant infrastructure investment. And so things are starting to line up to where I would like to say that we can move forward in an orderly fashion. Obviously, First Nation communities are going to be critical in all of this. And my expectation is that you're going to find a large majority of them very supportive of, orderly resource infrastructure development and ensuring that they can participate in those projects.
Well, Rory, to your point about bringing on board a private company to help make this possible, it has been suggested that we offer government-backed insurance on potential losses to institutional investors, and that offering first loss capital to attract the private sector would de-risk any given project. Is it necessary when pipelines, by their very nature, are large-scale, predictable income-generating assets? As Travis points out, the pension industry loves that kind of project, but does anybody else?
I think in terms, I mean, arguably pipelines are a utility model, right? So you absolutely have that predictable revenue once it's built. The challenge is that the building and the construction of the pipeline is arguably the entire opposite. And I think that actually comes down to the heart of the problem. Really what we're asking companies, private sector companies to do, or what we have been asking them to do over the last 10 years, is to build projects that have almost universally, actually in Canada's case, have universally failed from a private sector proponent. So that you're asking them to put up billions of dollars, years, if not a decade of kind of effort and opportunity cost towards this. And the reward at the end of the day is a regulated utility return. Doesn't seem like it's kind of commensurate with the risk that's being taken. So I think this worked historically because pipelines were typically, like historically prior to the politics of protest and environmental opposition changing around Keystone XL in particular, pipelines were generally boring infrastructure that not many people paid that much attention to. But when they became the focal point of environmental opposition to the sector, that I think changed fundamentally how they have to be thought of in the risk calculus of private companies and investment. Well, I think that, you know, you can take a lot of risk for, let's say, an upstream production asset where your upside could be massive. Let's say a massive new offshore field or something where you don't really have any cap to how much money you could make if oil prices spiked. But in the utility model, the Canadian Energy Regulator is going to explicitly to tell you what your rate of return is going to be at the other end. And that rate of return in many cases is going to be negatively correlated with the kind of positive impact on the sector writ large, which is part of what we're dealing with right now with the Trans Mountain expansion, the toll hearings that are currently ongoing, because those tolls were raised to try at least partially to make up for the massive overruns in cost of building the Trans Mountain expansion. And if those tolls are held high or potentially even go higher, that can have negative repercussions, not just on the barrels that travel through that pipeline, but through the entirety of the Western Canadian Sedimentary Basin production base, which is a much larger issue. And I think just for one kind of, I think, theoretical backdrop here, one thing I've increasingly been saying is that part of the Alberta industry in particular is unique globally. Virtually every other major production basin is right beside water. You know, the closest other kind of major producer that has to go through a pipeline to get virtually any of its oil to where it needs to go to global markets might be Kazakhstan, but obviously Kazakhstan produces roughly a third of what Alberta and Saskatchewan together produce. So this is a massive thing. And each time you increase production in that basin, each of those pipelines, its systemic value increases dramatically. Because if we get, let's say we have a pipeline go down, and like, for instance, very recently, the original Keystone pipeline, leaked and went down for a week or two. What that does is it doesn't just, again, hurt the barrels that would have been traveling through that pipeline. It backs up into Alberta, fills storage tanks, and depresses those differentials. And that hurts the entirety of the production base, all netbacks across all producers. And then that hits, as Travis will well know, and he can talk, I think, more about this, but that hits provincial royalty revenues extremely hard. That hits income taxes at the federal level. That hits investment intention of those companies and the employment, which leads to employment income taxes. So all of this kind of percolates back. So part of these challenges is that these pipelines become arguably single points of failure for the industry. And that, I think, is part of the challenge, and why not only we should be building more, but we should be building redundant pipeline capacity in order to both give us ample scope for growth and insulate us against inevitable failures in these systems.
Yeah, absolutely. And, we're talking about de-risking, pipeline investment, pipeline projects. Something that we also need to take a look at is, and part of the de-risking calculation or calculus would be ensuring that conditions exist where we can actually grow production. Rory mentioned the emissions cap, or Michael, maybe you mentioned it earlier in this podcast. And the emissions cap right now, in its current form, is a de facto production cap. And ultimately, unless we deal with that emissions cap, unless we either get rid of it or make fundamental changes to it, but perhaps maybe move it to an emissions intensity cap, which I would argue would be much more effectual in terms of the goal of reducing global climate emissions intensity. Unless we can make a change there, we're simply not going to see the private sector step up with enough certainty around adding additional egress, and egress matters. If we take a look at the Trans Mountain Pipeline, we take a look what that has done, not only for the 650,000 barrels that are flowing through, or 500,000 barrels, depending on the volumes of the day that are flowing through the pipeline, but what it's done, again, to Rory's point, for every barrel produced and sold in Canada. $3 narrowing of the differential means a $3 improvement on every barrel that's produced and exported in Canada. If you do the quick math on about 5 million barrels a day, that's $5.4 billion a year annualized. It's a massive, massive wealth creator, just ensuring that we have enough egress opportunities. Redundancy is required so that we can keep a very healthy and competitive differential.
And just to tack on to the one thing at the end there, I think the $3 narrowing, I think, is very welcome. And I think we saw that come off. I would argue that the impact is even greater, because even if we didn't have the pipeline, I would probably say differentials would be at least $10 wider right now. So it's more like $13, $15 a barrel opportunity costs that we avoided. The $3 is, I think, fantastic. But I think even the difference of scale is massive. And we would have absolutely been overrunning pipeline capacity by now. And we likely may have been revisiting the late 2018, episodes where without egress, your only option is effectively perpetual curtailment, which I think, to Travis's point, if we're talking about the effective production cap being the effective emissions cap being an effective production cap, a lack of egress is absolutely fundamentally at its most basic level of production cap that we will not be able to get around.
So what's your advice to the Prime Minister's office on how to increase our energy independence from the United States?
Number one, ensure that we have an environment in this country where we can get big projects built and developed. And there was a number of pieces around that. Bill C-69 has to be scrapped or severely modified to give us lasting predictability on building big projects.
My advice to the Prime Minister would be to do one of two things: to either dramatically and rapidly de-risk the investment and construction of a pipeline to the West Coast immediately, or use the existing power of the Trans Mountain Corporation to expand capacity in that current line. And if that is not sufficient, build a new pipeline with that Crown Corporation.
Gentlemen, thank you so much for your time and insight today.
Thank you.
Thank you, Michael.
Travis Toews is a former Minister of Finance and President of the Treasury Board for the province of Alberta and a senior fellow at the Institute. Rory Johnston is the founder of Commodity Context and a lecturer at the University of Toronto's Munk School of Global Affairs and Public Policy. For further insight into the way forward for Canada's energy sector in the age of U.S. aggression, visit cdhow.org. I'm Michael Hainsworth. Thank you for joining us.
You've been listening to the C.D. Howe Institute podcast with Michael Hainsworth. Subscribe on iTunes, Google Play, and Spotify. The C.D. Howe Institute is an independent, not-for-profit research institute whose mission is to raise living standards by fostering economically sound public policies. The Institute is widely considered to be Canada's most influential think tank and a trusted source of essential policy intelligence, distinguished by nonpartisan, evidence-based research and subject to definitive expert review. Visit cdhow.org and follow us on Twitter and LinkedIn. Thank you.